Federal Reserve set to cut rates, amid growing concerns over U.S. data gaps. The U.S. Federal Reserve is gearing up for its upcoming policy meeting on October 28-29, 2025, with expectations pointing toward another interest rate cut of 0.25 percentage points, bringing the federal funds rate to a range of 3.75% to 4.00%. Financial markets are aligned with this outlook, anticipating the Fed's continued efforts to balance economic growth and inflation. However, a prolonged U.S. government shutdown, ongoing since October 1st, has halted the release of critical economic data, leaving policymakers navigating a murky economic landscape with limited visibility. A data vacuum complicates decision-making. The government shutdown has disrupted the flow of essential economic reports, including employment figures, inflation metrics, and GDP updates. Without these, the Fed is forced to rely on incomplete or private sector data, which lacks the comprehensiveness of official statistics. For instance, private data suggests job growth slowed to an average of 29,000 jobs per month from June to August, far below typical levels. This has raised concerns about labor market weakness, a key focus for Fed Chair Jerome Powell and other officials. The absence of government data also obscures the inflation picture. August's Consumer Price Index, CPI, showed inflation at 2.7%, above the Fed's 2% target, with projections indicating a potential rise to 3.1% in September, data due October 24. Some Fed officials, like Jeffrey Schmid, argue that current rates are appropriately positioned, while others, such as Stephen Moran, advocate for further cuts to stimulate growth. The lack of clear data complicates these debates, forcing policymakers to make decisions based on fragmented insights. Private data as a stopgap. With official reports unavailable, Fed officials are turning to alternative sources like credit card spending data, business surveys, and consumer confidence indices. However, as Richmond Fed President Thomas Barkin noted, these are complementary at best, not substitutes for robust government statistics. The prolonged absence of data could erode confidence in the Fed's ability to assess the economy accurately, especially as new risks emerge. Emerging economic challenges. Beyond the data gap, the U.S. economy faces additional headwinds. Rising U.S.-China trade tensions, credit losses at two major banks, and proposed tax changes, such as exemptions on tipped income, could jolt markets and consumer behavior. The economy also appears bifurcated. High-income households continue to spend, while lower-income families hunt for bargains, and business investment, outside of AI, remains sluggish. Minneapolis Fed President Neel Kashkari warned that a prolonged shutdown could further undermine economic confidence, amplifying these challenges. Fed's cautious approach. Fed Chair Jerome Powell and Governor Christopher Waller have emphasized caution in this uncertain environment. Waller recently noted that the economy is harder to read due to its polarized dynamics. Despite this, the Fed appears committed to its planned rate cut, with markets pricing in a high probability of the move. However, the lack of reliable data raises questions about the Fed's ability to fine-tune policy effectively. If the shutdown persists, projections for 2026, anticipating rising inflation and steady growth, could be at risk, potentially forcing the Fed to reconsider its strategy, whether by cutting rates further or tightening policy. Looking ahead. As the Fed prepares for its next meeting, the data vacuum looms large. Policymakers are effectively operating on estimates, a risky approach in an economy facing multiple uncertainties. The September CPI report, expected later this week, may offer some clarity, but without a resolution to the shutdown, the Fed's path forward remains fraught with challenges. As Barkin put it, the longer the data blackout continues, the harder it becomes to make informed decisions, a concern echoed across financial markets and policy circles alike. For now, the Fed is poised to proceed with its rate cut, but the growing unease over missing data underscores the delicate balancing act ahead. As economic risks mount, the central bank's ability to adapt without a clear picture will be put to the test.